Hello, I'm Paul Gifford, and welcome to this edition of the Market Share. Many of our clients are asking about the tremendous stock market recovery over the past 2 months after the historic fall of 34% in 33 days as federal and state governments shut down much of the country. We have to remember the stock market is a forward-looking investment. As such, when you think back of March, it was falling because it was looking forward and going, we are going to have historically bad economic data, and that's what we're seeing today. Now, being that it's forward-looking, it's actually now looking out several months ahead. And in past recessions, the stock market is typically improved 3 to 4 months before economic activity actually improves. And we believe that's what's happening today. In this case, the timeframes may be a bit shorter due to the pandemic and the decision to shut down. Several weeks ago, we discussed watching for green shoots in the economy as signs that we are on a path to economic recovery. But given the recent economic data, which has been so bad, we're not likely to see improvement for several weeks or even a couple months in the macroeconomic data. There is one area that we are following. It's called high-frequency data, basically information that comes out weekly, such as jobless claims, continuing jobless claims, rail traffic, fuel usage, and TSA check-ins. Now, over the past week, we saw that initial jobless claims again showed 2 million people becoming unemployed, and a cumulative total over 40 million Americans have become unemployed since the pandemic began. The slide we're going to show you here is that of continuing jobless claims. And as you can see, it's steadily risen over the last several months and actually improved by 3 million jobs this last time. It's the first drop in the continuing jobless claims since the beginning of the pandemic. This did not make most of the headline news, but it is clearly a green shoot that we'll be continuing to watch in the weeks ahead. Another data point that we like to look at is the economic activity in China. Now that may sound odd, but in many ways, China is anywhere from 2, 3, maybe even 4 months ahead of us as far as the virus and reopening. Their economic activity is improving steadily, but it's still not back to pre-pandemic levels. One last point that is starting to raise interest in us is the savings rate of Americans. It has soared to historically high levels, which you go, that is very odd in this kind of environment. But if you combine massive fiscal payments that many have received over the last several weeks, combined with dramatic cuts in spending by Americans, and you can see that the savings rate would increase dramatically. We continue to believe that ultimately that savings rate will come down and that extra money going into the economy will help the economic recovery. While bad economic news will continue to garner the headlines, it's these green shoots in the coming weeks and ahead that we'll be looking at. As always, we're dedicated as ever. We're being strong, stable, and personal will get us through anything together.